So in a world that is about to be absolutely flooded with AI-generated everything, a brand new kind of scarcity is popping up. And with it, a massive investment opportunity that I think most people are just completely missing. Today, we're diving deep into what we're calling the proof of human premium, and why businesses built on real, authentic human talent might just be the smartest play of the next decade. To really get why, though, we first have to understand the sheer scale of this AI revolution. First things first, let's just ground ourselves with this one number. By 2026, worldwide spending on artificial intelligence is projected to hit $2.52 trillion. Just let that sink in. This isn't just another tech trend. It's a tidal wave of cash that's literally reshaping every single industry on the planet. But, whenever you see a tidal wave of money like that, you have to stop and ask, is all this excitement getting a little ahead of reality? I mean, even Sam Altman, the CEO of OpenAI, the guy at the absolute epicenter of this whole thing, has admitted that, yeah, we're probably in a bubble. That's a huge signal that just throwing money at anything with .ai in the name might not be the smartest move. And that brings us to the core question of this whole explainer. When AI can create an infinite amount of content, the basic laws of economics tell us that its value will eventually drop to near zero. So in a world where everything is abundant, what becomes priceless? Well, the answer is the one thing AI can't truly replicate: authentic, messy, brilliant human enterprise. All right, so here's our game plan. First, we'll look at the absolute frenzy of the AI gold rush. Then, we'll explore why that very frenzy is making humanity the new scarce resource. We'll even give you a tool to measure this. We're calling it the authenticity multiplier, and a playbook for spotting what we'll call a human moat. Of course, we also have to talk about the biggest challenge, the scalability paradox, before we land on the final, critical question. In the next decade, are you betting on code, or are you betting on talent? So let's kick things off with where we are right now, the AI gold rush. This is a moment defined by a flood of capital, just being thrown at anything with an AI label, a lot of the time without any clear path to actually making money or having a real, lasting competitive edge. Now, what's really wild about this slide are the numbers. I mean, look at this. You've got companies like Palantir trading at 110 times sales, not even profit. Tesla is over 300 times its earnings. And the private market? It's even crazier, with more than 500 AI startups now valued at over $1 billion each. Investors are basically pricing these companies for absolute perfection, leaving zero, and I mean zero, room for error. And all this frenzy, well, that's what creates our opportunity. It's time to take the contrarian turn, to look at what everyone else is ignoring. Because in any economy, when one thing becomes super abundant, its exact opposite becomes scarce and valuable. And as AI floods the world with content, the real scarcity becomes humanity itself. This is such a powerful idea. Think about it like this: a MasterChef's restaurant or a high-end architecture firm. They aren't just static processes. They're living, breathing things. The people inside are constantly learning, adapting, getting better at their craft. This natural drive to improve gives these human-led businesses a built-in tailwind, always pushing their value up over time. So when we say human enterprise, what are we actually talking about? Well, it's this amazing mix of raw talent, practice skill, and pure artistry. It's the creative spark of a designer, the decades of experience in a watchmaker's hands, the unspoken teamwork of a film crew. This is the stuff that you just can't automate, and that's what creates real, durable value. Okay, human enterprise is a great idea, but how do we actually measure it in the stock market? To do that, we need a specific tool. So let's call it the authenticity multiplier. Now, to get the multiplier, you first have to understand the PE ratio. And honestly, this is the simplest, most powerful way to think about it. If a stock has a PE of, say, 15, it means that for every $15 you spend to buy that stock, you can expect to get $1 back in profit a year from now. So a lower number is usually seen as cheaper. I absolutely love this analogy. A PE ratio is basically a hope thermometer. It's a measurement of how much hope and future growth investors have already baked into that stock's price. So a sky-high PE, that means the market has some seriously sky-high hopes. So here's where it all clicks into place. The authenticity multiplier is what happens when a company's deep well of human talent, its human moat, convinces the market that its future earnings are safer and more valuable. This justifies a higher and, crucially, a more stable PE ratio than its competitors who just rely on processes that could be automated tomorrow.
Okay, let's get actionable. This is the investor's playbook. How can you, right now, go out and spot companies that have this durable human moat?
First, you got to start with the classics from Warren Buffett, right? A business moat could be a powerful brand, being the cheapest guy on the block, or making it really hard for customers to leave. These have all worked for decades, but in the age of AI, a lot of them are getting easier and easier to copy. And that's why we need to look for something deeper. And this quote just nails the pivot we need to make. Because beyond all those other things, the single greatest, most durable asset any company has is its people. This is the one moat that's the hardest to build and impossible for an AI to cross. So here are 3 real, concrete clues you can look for. Number 1, skin in the game. Are the top execs heavily invested in the company's stock? That means their interests are aligned with yours. 2, check employee satisfaction. Go on sites like Glassdoor. Happy, respected people do incredible work. And 3, look for decentralized trust. You want to find leaders who hire the absolute best people they can find, and then get out of their way and let them work their magic. So you really end up with 2 fundamentally different kinds of businesses. On one side, you have the process-heavy companies that are all about repeatable tasks. And believe me, they are extremely vulnerable to AI. On the other side, you have talent-heavy companies built on skill and artistry that you just can't replace. They don't just survive the age of AI, they are poised to thrive because of it. But look, we have to be honest here. Investing in these amazing talent-heavy companies, it's not a free lunch. And that brings us to the scalability paradox, which is kind of the brutal truth of this whole strategy. You've probably heard this term blitz scaling thrown around Silicon Valley. It's this idea of growing at all costs, just burning through piles of cash to capture a market as fast as you possibly can. And then maybe you'll worry about profits later. This model works really well for a very specific kind of business. And here's the paradox in a nutshell. A software business is perfect for blitzscaling because you can make 1 million copies of your code for basically nothing. But a human-centric business, it can only grow as fast as it can find and hire more brilliant people. That makes it way harder to scale, and it turns it into more of a high-risk, boutique-style investment that you really have to pay close attention to. And that brings us to the end of our journey, and really, the final crucial question for any investor who's trying to figure out the future. When it comes down to it, where are you going to place your bet? There's this great old saying that just perfectly sums up the value of real expertise. When money meets experience, the experience gets the money, and the money gets the experience. At the end of the day, capital always finds its way to proven talent, people who know how to protect it and make it grow. So as you look out at this AI revolution, just ask yourself this one simple question. Are you chasing the hype and investing in infinitely scalable code that could, one day, be totally worthless? Or are you investing in the one thing that actually becomes more valuable in that world? Scarce, proven, and irreplaceable human talent. The answer to that question just might define your success for the next decade.